Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, August 1st, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Good to have you. Why don't we start out by going through I guess like the Japanese cross markets, across FX and rates and basis during the month of July. Maybe just review things for our listeners as a way to start things out.
Okay. In July, yen rates declined and the yen basis tightened. The yen yield curve grew increasingly skewed in April to June, and the yen swap rates and the yen basis curves rose and widened. While the 10-year JGB yield topped the BOJ's limit of 0.25% in July, it then traded at below the 0.25%. This suggests that concerns about the sustainability of the BOJ's yield curve control operations have eased. Japanese investors unloaded a net 868 billion yen of overseas securities between July 3rd to 23rd, as foreigners net bought 9 trillion yen of Japanese securities. In July, Japanese scaled back their selling of foreign bonds and in fact turned a net buyer between July 17th to 23rd. Meanwhile, the foreigners net bought 3.7 trillion yen of medium to long-term yen bonds and 3.9 trillion yen of short-term yen bonds. Overseas investors covered sales of 10-year JGBs made between April and June, and buying of TDBs picked up ahead of the US rate hike as dollar-yen hold premium remained attractive. In July, the strength of foreigners' JGB covering as a reaction to the BOJ's fixed-rate JGB buying operations was impressive. During the month, foreigners turned the net buy of Japan stocks and investment fund holdings by 1.2 trillion yen, and foreigners expanded their exposure to yen assets considerably.
Yeah, pretty interesting reversal in Japanese investor purchases and sales of foreign bonds, as you point out. So I think, if I'm not mistaken, so Japanese investors were sellers of foreign bonds for 8 straight weeks, and that ended the week, the week of the 23rd. And then, as you point out, pretty large short covering of foreign investors of JGBs, which suggests that they're sort of done fighting the BOJ, at least for now. Sticking on July, though, it ended up not being that significant, but the BOJ did hold a policy meeting. What do our listeners need to know about that?
Okay. The BOJ made no changes to monetary policy in July following the assassination of former Prime Minister Shinzo Abe just ahead of the upper house elections, and the solid victory by the ruling party in those elections. In April to June, the JGB market reacted nervously to comments by the BOJ Governor Haruhiko Kuwabara, but report headlines proved to be unfounded. And it is now clear that the BOJ will not alter policy operations. Demand for yen basis among Japanese investors will likely be limited over the Obon holidays, but there is a risk that foreigners try to sell JGB futures again, which causes yen rates to increase and yen basis to widen. As such, comments by leaders of G10 central banks could impact dollar-yen spot rates and yen rates during overseas trading hours, beer JGB futures, and yen basis arbitrage trading.
Yeah, I mean, the Obon holidays obviously are a time for thin liquidity in Japanese markets, add to, sort of summer vacation season here in the States and many other places as well. That certainly sounds like a recipe for elevated realized volatility to me. So moving on, that was a pretty comprehensive overview of Japanese markets during the month of July. What should our listeners be watching for in August across these markets?
Japanese investors have been struggling with rebuilding their securities investing position in fiscal year 22. They have continued to unload yen and falling bonds, but with a dearth of prices to park their surplus funds, they have unloaded falling bonds only at a slower pace and turned back to JGBs. Ultimately, they may have to rebuild, restore their JGB and G10 bond positions to some degree. The battle over 10-year yields, pitting fixed-rate JGB buying operations against JGB selling that touched off doubts about the sustainability of the BOJ's yield control operations, has quieted down for now. Going forward, Japanese investors will likely settle down and rebuild their yen and foreign bond positions. They bought a net to 230 billion yen of foreign stocks and investment fund holdings and a net 107 billion yen of medium to long-term foreign bonds in a week of July 17th to 23rd. From mid-July onward, Japanese investors turned net buyer of G10 bonds and accumulated more alternative assets. In August, we see a neutral bias for yen rates and expect Japanese investors to rebuild their falling securities positions as they also buy credit assets, especially alternative investment assets, after unloading falling bonds. Yen basis for medium to long-term tenors could widen on dollar asset funding demand with yen basis on Japanese investors and foreign issuers. The medium zones are relatively attractive for yen samurai financing, swapped to dollar. The Japanese corporate sector could convert its surplus cash from around the world and invest domestically, but we expect things to be slow out of the Obon summer holidays.
Okay, so a few sort of few different things going on that could potentially widen the basis, between Japanese investors and companies repatriating money, samurai
Mm,
issuance, that sort of thing. And also, I really would emphasize your point about how Japanese investors eventually have to rebuild these bond positions. As we've discussed on the podcast, and as have you pointed out in your research, Japanese investors
mm,
have sold a ton of foreign bond this year, record
mm,
amounts, by a variety of different metrics. So I think that's key. The scale of selling just can't, mathematically, you can't continue doing that. These positions need to be rebuilt at some point, when and where, obviously to be determined. But I don't want to end this podcast without getting to your outlook across various markets. Why don't you tell our listeners what you're expecting for yen rate, spot dollar yen, and yen basis?
The FOMC raised the target for its policy rate by 75 basis points at its July meeting, and Chair Jerome Powell indicated that further rate hikes would come at a slower pace. Dollar started to weaken as two-year Treasury yields declined, and dollar yen fell to the 131 level. Meanwhile, with Japan still showing a trade deficit, early July customs clear data released July 23rd showed that Japanese import growth, up 32% year over year, has slowed from June, up 46% year over year, and export growth, up 12% year over year, has also weakened, up 19% year over year. We expect dollar yen to maintain its neutral bias and trade in a lower 3 yen range between 131 to 134. The yen swap rate curve has declined and appeared to have settled down after the July ECB and FOMC meetings. 10-year JGB on August 2nd and also JGBI, the August 4th auctions are upcoming. Japan will soon be starting the Obon summer holidays, and the Bank of Japan does not plan to meet in August. So we do not expect the yen bond market, JGB market, to be volatile. We expect yen rates to medium and euro bias. The yen basis curve has widened, especially for the short end and medium-term zones. Ministry of Finance data shows that the Japanese turned the net buyer of overseas securities in the week of July 17th to 23rd by 356 billion yen. They net bought foreign stocks and investment fund holdings by 230 billion yen, medium to long-term foreign bonds by 107 billion yen, and short-term foreign bonds by 18 billion yen. Japanese have been net buyer of foreign stocks and investment fund holdings for 6 straight weeks, and turned net buyer of medium to long-term foreign bonds again after 9 weeks. Japanese institutional investors have been diversifying their investment portfolios, shifting from traditional foreign bonds to foreign stocks and expanding their weightings of credit investing via investment funds. Over the same period, foreigners net bought 1.2 trillion yen of Japanese securities. This included net buying by 966 billion yen of short-term yen bonds and 298 billion yen of foreign Japan stocks and investment fund holdings, as well as net selling 15 billion yen of medium to long-term yen bonds. Overseas investors have been actively arbitraging TDBs as a tool for their surplus G10 bond portfolio funds. They have taken a break after net buying 3.8 trillion yen of medium to long-term yen bonds over the previous 2 weeks, but we think they could start net buying again soon. We expect yen basis bias to change from widely to neutral ones.
Okay, great. So dollar yen, you're neutral. Also neutral on JGBs as the BOJ continues to successfully defend the upper band of its yield curve target. Although, as you pointed out, with Japan quiet over the Obon, holiday, you could, and if foreigners were to get active, that could be sort of interesting there. And then neutral on dollar yen basis. However, earlier in the podcast, you did mention a couple of things going on in the background that could give it a widening bias. So. A lot of stuff there. Thank you for taking us through it as always, and thanks for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.